Welcome back. Today we're doing a deep dive into liquid brokers. You might have seen them popping up.
Yeah, they're relatively new on the scene.
Exactly. Our source is a recent YouTube review, and, well, our goal here is to give you the essentials, what makes them appealing, but also what are the regulatory touches you need to know about.
Okay, so setting the scene a bit. Liquid brokers. They've been operating for maybe 2 years now, and they do have a connection to pulse markets over in Australia.
Okay.
But, and this is really the crucial part, they don't actually have their own full independent financial license yet.
Right. The independent license, that's key.
It really is.
Okay.
And it pretty much shapes everything else. Interestingly, because of that Australian link, actual Australian residents can't join.
Yeah.
But most other countries, yeah, they seem to be welcome.
Okay, so let's talk about why someone would join, because the barrier to entry seems incredibly low. They've clearly designed it that way.
Yeah, absolutely.
We're talking Forex, crypto, stocks, indices, commodities, the whole range. And you can start with just, what, a $10 minimum deposit?
Just $10. And withdrawals apparently start around $20.
Mm.
So, yeah, they make it super easy to just dip your toe in.
It seems almost too easy for the kind of platform they're offering.
Well, that's the thing. The platform features are quite sophisticated considering that low entry point. They got different account types. There's a no commission ECN account.
ECN, right, so potentially tighter spreads because you're connecting more directly with liquidity providers.
Exactly. Then there's a VIP account, presumably for, larger volume traders, and also a swap-free option.
And platform choices.
You've got MetaTrader 5, which is, well, pretty much the industry standard, or you can use their own platform, Liquid Charts. And that actually integrates with TradingView, which is quite handy.
Okay, so easy entry, sophisticated tools. Now let's get to the bit that likely draws in the risk takers. The leverage.
Ah, yes. Leverage.
This is where you really need to pay attention, right? For professional clients, they're offering up to 1.500 zeros.
Which is astronomical. We really need to put that number in perspective for you.
Please do.
Okay, so in places like Europe or the US, where regulation is tight, retail leverage is often capped, maybe 1.3, sometimes 1.50 on certain assets.
Right. Much lower.
Much, much lower. This broker is offering 10 times that, potentially. Think about it. 1.500 leverage means for every $100 of your own money, you're controlling a position worth $50,000.
Wow. That's huge exposure.
It's thrilling if the market goes your way, but incredibly dangerous if it doesn't. A tiny move against you can wipe out your capital instantly. And let's be clear, this kind of leverage is usually available because they operate outside those strict regulatory frameworks.
That's the trade-off, isn't it? Access to high leverage often means less regulatory protection.
Precisely. It's regulatory arbitrage in a way.
So that's the trading risk. What about operational stuff? Security seems standard. Encryption, 2FA.
Yeah, the basics seem to be there. Deposits via crypto are apparently quite fast. Bank transfers, as usual, take a bit longer, maybe a few days.
Yeah. But the withdrawals, that seems to be the main operational headache mentioned in the source.
That's the big red flag, yeah. The source highlighted that withdrawal times can be unpredictable. Sometimes okay, sometimes delayed.
And that's a major issue. If you can't reliably get your money out, especially profits,
then the low deposit doesn't mean much, does it? It really highlights the counterparty risk you're taking on with a less regulated entity.
Okay. But they do offer ways to test the waters.
Yes, to be fair, they offer demo accounts, so you can try things out without risking real money, and they apparently run monthly trading competitions too.
So the advice there would be?
Test extensively. Use the demo. If you do decide to go live, maybe start very small, test the execution, and definitely test the withdrawal process with a small amount before committing any serious capital. See how smooth or not smooth it really is.
Right. So let's try and sort of boil this down. Liquid brokers. It looks like an interesting option if you're specifically looking for wide market access and that really high leverage, especially maybe for crypto trading.
Yeah, it caters to that demand.
But you absolutely have to weigh that against the facts. It's a newish platform. It doesn't have that full independent license we talked about. And those unpredictable withdrawal times are a serious fundamental risk.
Couldn't agree more. Start small. Be cautious. Test everything.
Yeah.
That's the mantra here.
Definitely.
And, this whole situation raises a broader question, something for you listening to think about. What does it signal about the financial ecosystem today? When you see this pattern where often the less formal independent regulation a platform has, the more aggressive it's willing to be with things like leverage and market access, Is this high reward potential always going to be tied directly to taking on maximum counterparty risk? What does that imply about the future and maybe the limitations of global financial regulation?
Hmm, that's a heavy thought to end on. Something definitely worth considering about the trade-offs involved.